All right. Hi, everybody. Elliot Katz here. We're still in the throes of earnings season, and Facebook reported today, and the stock is trading slightly higher in the aftermarket. Doesn't seem like the market's response is as strong as it was for Google and Apple. And Apple's earnings are coming out tomorrow, so I think that'll put a nice little bow on this earnings season. Let's see, we got Alibaba coming out tomorrow before the market opens. So that should pretty much do it for the biggies in the tech world. So we'll see how it all pans out. But as you know, our goal is to try to stay insulated from that and not get caught up in it. If we see opportunities in these stocks, that's great. If we don't, then we'll just move on to something else. And I think so far, with our average over the 15 trades that we've been successful at of 35%, 2 scratch trades, and 2 losses with an average loss of 8%. I think we're actually doing pretty darn good. So I would continue to follow what we're doing with the trades in this educational portfolio here. As I said, this is for educational purposes. Many of these trades I do have in live accounts that I do trade, but since this is an educational program, we look at the ones in this educational portfolio as educational trades for educational. We're not obviously guaranteeing anything, and we want you to learn. And as you follow this, you learn, what works, what doesn't work. You'll see what does work. You'll see what doesn't work. When we do things that don't work, you'll see that they don't work. And something that's not working right now is this Las Vegas Sands. We're very concerned about the earnings. The stock did not react well to earnings, but the put spread that we bought did not really expand. So being concerned that the stock would continue to go down, we left the spread on. And when the stock continued to be flat, this on Friday, I sold the November 3rd, the one expiring this Friday, the 62.5 for 35 cents, which got our cost back down to $2.35. Well, as you could see, the stock went up today. And with only a few weeks to go, I decided to roll this option out to next week's 62.5 and take out another 21 cents. However, as you can see, because the stock is now at 64, the calendar spread has really narrowed. Because as you know, as you get to the extremes of a calendar spread, either too high or too low, the spread collapses. So we started with a cost of 276. We're at 214 right now. It looks like, if everything, if nothing happens to improve this trade, we will have a pretty high percentage loss. But in the scheme of things, it's not going to impact our overall results that much. Now, we still have 2 weeks to go, so even though WINS was up today as well, maybe we'll get a little correction back to 62.5, because if we do, then the spread will widen again, and perhaps we can sneak by with a little bit less of a loss. Sometimes that's the way you have to look at a trade, is I'm really trying at this point to limit the loss. As I always say, that's life in the big city, and that's what we have to learn to actually deal with. I'll go over some of the other positions, but we do have some new stuff today. We've got the Philip Morris pushing some of these out to January. These three positions that are new today. We've got the Jan 65 call and this week's 65.5 call. I did that because I was able to get 31 cents versus $2 in for our January, and that's because the stock generally has low volatility and also pays a dividend. So that's always going to compress extrinsic value. So we're into this trade for only $1.78. Let me show you why we actually did it. And this is one of the benefits of having a charting program where you can sort things out not only by price or capitalization, but in this case we also have a feature here where we can sort things out by their next earnings date. And because, as you know, I'm not a big fan of trading things where earnings are coming up, there is a column here that I have in my list of weekly optionable stocks, which gives you the next earnings date. So what did I do? I just started ranking them by next earnings date with the latest ones first, then moving closer and closer and closer to today and just going through them until I found some interesting charts. And one of the ones that I found that was interesting was I call it Philip Morris. I'm sorry, it's Altria. I'm an old soul. So here we have Altria, and you could see the stock's really been trying to base out here. Maybe it found some dividend support. Maybe it got a little oversold down here. And things are starting to improve a little bit. And when we go over here to look at our trend following algorithm, we could see that the stock did give a buy signal here. And now it's bouncing along this support area. This is the daily and weekly chart, and that's what we're most interested in. These 120-minute and this 2-hour, this hour and a half, they're gonna bounce around a lot, but we've got a lot of support in here, so it made some sense to buy the 65 call and sell the 65.5 for this week. That was Philip Morris. What else did we do? Suncor Energy. Okay, now if you've been following our Whiting Petroleum, here's an option that we bought a while back for 57 cents. And the stock is now getting going. It's getting into gear. The high today was $6.50. So this option is now over $1, and we've got almost a double in this, which is actually pretty good. We have till December. I think the stock has some legs here. My personal target is the 7.5, 8 area. So I don't think I'd be looking to sell this until we get to 2 or 2.5. Now, if we get to a point where this delta is close to 90, we may be able to roll this up to the 6 call, take some money off the table, and stay long. So be on the lookout for a roll up in that stock. So Suncor also being on this list of stocks that have already reported earnings and won't be reporting again for a little bit. We take a look at this chart and we see that, hey, it's coming to life here. So we look here at this near-term resistance in the 35 area. And what we discover is that there is an opportunity to buy the Jan 34 call for $1.30, which I thought was a great buy, and sell next week's 35 call for 20 cents. So now we're into this thing for $1.10, and you know how it goes, right? If we get to 35, we're in beautiful shape. If we get to 35.20, we buy this back for 20 cents, and hopefully we can roll out and up to a higher strike price. And if we look at our trend following algorithm, we see that the stock gave a buy signal down here, held the support area, and now it's heading back up again. Now, there is some resistance up here, which we expect, but things are definitely improved here. So I certainly don't mind risking $1.10 here through January. We've got plenty of time. Come on, come back. There we go. We've got plenty of time to manage this position. Even if we're taking out dimes, we've got 80 days. Okay, we've got over 10 weeks to actually work this thing out. So not terribly worried about that one. Yandex, I don't even know what they do, and quite frankly, I really don't care. But this is another stock who actually reported earnings already. And you can see that we've got our momentum indicators, our stochastic. We got a little pullback here today, even though the stock was still up for the day. It did close lower than the opening. So we're probably going to hang out around here. So what did we do here? We bought the Jan 33 call for $3.30. Stock's a little on the volatile side. And we sold the November 10 35 call for 60 cents for a $2.70 debit. Let's take a look at this guy. And what do we got? And we got a buy signal. See, the buy just came in right here, and we've got our support levels here. This is a beautiful short-term support level here with support, big, more important support at 33. So we're very happy to own the 33 call here at 330 and be short this call at 60 cents. And we did that when the stock was, oh, I didn't write down the stock price. I'm going to have to check that out. Okay, so where are we on the rest of the trades? Starting at the top, well, forget about AbbVie. That's a disaster, but it does happen. Carnival Cruise, we're down to $1.15 with 4 weeks to go. So we're going to collect some more premium here. Costco, we're down to $1.89. And the stock and the spread is trading at $1.66. The 162.5 call is only slightly in the money. So we've got opportunities here to continue to collect premium. In fact, if I just showed you this roll to keep it as a calendar spread, we could get another 59 cents out of this trade, which would get us down to $1.30. Not too shabby. Okay, the Harley Davidson, we got a little improvement in the stock today. It's back to $47.80. Our cost on this trade is 90 cents, and we're at 82 cents. So not too bad. We're only down 8 cents on that trade. JD, unfortunately, that's a stock that really has run into some troubles, although when we did the roll last week at 36.46, the stock has recovered over a point. But the November 39.5 call that we sold at 11 cents is only 15 cents. The cost of this trade is down to $1.98, and it's trading at $1.07. So we do have our work cut out for us on that puppy. Already shared with you the Las Vegas Sands, the Schlumberger. We're just going to wait that out. Remember, we got our cost on that trade all the way down to what, 80 something cents? I got to go way, way back because we've been working on this one. Yeah, 88 cents. So we started with a $3.05 cost, and we got our cost down to 88 cents. So we've been working on this one for a while. This does happen, again, sometimes. They take longer. There's been a few months. But if this group continues to do well, we're watching the Schlumberger just kind of slowly but surely wind its way back up. You know what we need? We need the stock to get, you know, far enough above 67.5 to make this thing worth 88 cents. So we'll just have to wait and see on that one. And the Whiting Petroleum I shared with you as well. So the bottom line here is that we've got earnings season winding its way through the system. The market doesn't seem to be fazed by really anything else that's going on. Fed's not doing much. People are waiting for the tax bill. I'm not sure the market is really going to care. You know, so I think we're just going to have to look for our spots like we do. I've got a list that includes a lot of good names here. I want you to take a look here at Akamai, which was on my list. Hang on. Which was on my list as a bullish play. But earnings were coming, and I really did not want to walk into that. And now look where we are. We're right where we should be in terms of pulling back exactly to that breakout point. Now, momentum obviously is going to slow down. So we have to understand that the reason the stochastics are not looking that great, and maybe the momentum bars on the histogram are showing a little bit of weakness. That's really because the stock is pulling back after having such a big run to the upside. But the trend chart here just looks really solid. So, you know, not to overload this with trades, but I think we've got to be ready to add trades as they appear, and as more stocks start, you know, getting past earnings season, what's going to happen is this list, starting at the latest earnings report and moving in towards, let's say, December 1st or January 1st, this list is going to start getting longer. Cabot Oil and Gas is on the list. You know, love to see a pullback here. Baidu, everybody, you know, loves the stock. You know, it's a great Chinese stock, but it's kind of had some difficulties here after earnings, you know, so we're not going to do anything there. Pepsi still looks weak, so I'm not sure we want to do anything here if it starts breaking down again, which quite frankly it looks like it just might do, because Coke doesn't look much better. The only saving grace is that maybe this stochastics will start turning back up again, but this is not good. That's not good at all. So we're going to keep using our list here, and we'll keep finding trades. And if we ever find ourselves looking at an index, an ETF or something that we think is washed out, we'll probably try to go back and do some bull put spreads. You know, we really haven't done them. That's because I think even though the market's not volatile, anything can start moving at any time, right? So we want to make sure that either the downside momentum is done if we're going to do put spreads, or the upside momentum is done if we're going to sell call spreads. Okay, so let's see what happened to Tesla here. Let's see what's going on with Tesla. Tesla reported. There you go. It's down 14 bucks. See, that's why you can't really mess around with this stuff around earnings. You just don't know what's going to happen next. But now that Tesla's earnings are gone, let's let the stock settle out, and maybe we'll find an opportunity. Okay, so just to reiterate, we are never going to chase things. We are never going to get caught up in the emotions of earnings season. We're going to stick to our knitting. We're going to use the tools that we have at our disposal. We're going to use our understanding of option pricing behavior to try to hit singles and doubles, a very high percentage. As I said, right now, you know, we got 15 out of 19 have been winners. Only 2 out of the 19 have been losers. So we're looking at a 90% non-loss rate, if you want to look at it that way. So we're just gonna stick to our knitting and just keep at it. And if something comes up that's a little more complicated that I think's worth our attention, we'll actually talk about it. So everybody have a great rest of the week. And I will see you on, when will I see you? I'll see you, and I will see you on, when will I see you? I'll see you next Monday. Take care and good luck.